Good morning. It's Sunday, May the 5th, 2019, and today we're going to talk about the danger of Bitcoin moon FOMO. This is the 24 hours of Bitcoin. I'd like you to pause the video to read through the disclaimer. This is not trading advice. It's sort of my trading journal of going over my own trading methodology against the price of Bitcoin. So let's jump right in. This way, when I'm doing these videos, I can come back 6 months later and say, what was I thinking on that day? What did I miss? What did I get right? So here we are looking at the same thing we've been talking about the last few days, this divergence in the RSI in the 1 hour time frame. We can also see that we have this top along here and what I would say would be a divergence in the buying volume where the on-balance volume was nice and strong on this wave up, and then not as strong for each time we've touched this top since then. So that is a bearish divergence for how I'm observing this. And then we go to the next indicator and we're looking at the MACD indicator. We've got our triple top again, and we've got the MACD crossing over and then crossing over weaker again here at lower levels. So for me, this is another bearish divergence. And so I'm watching for this to be a top formation. Now, when I start backing out and we start looking at the 12-hour time frame, clear off those details, now we're starting to see a little bit of a different thing where the RSI is building strength and not diverging to a bearish divergence here on the 12-hour time frame so much anymore. When prices were doing this and the RSI was in this position, there was our bearish divergence, but it has been rejected here as the RSI has gone up stronger. So that sort of negates some of the, or supports a longer term stronger view. Let's go to the 12-hour bar for the on-balance volume, and we can see this is picking up here. It's pretty nice compared to historical levels all the way along. On balance, buying. And we'll go in at the end of the video more. We'll look at how this goes against some historical examples. Then we go to the 12-hour bars with the MACD indicator, and this is giving us a very key turnaround right here on this breakout, which is pretty cool. And to see the histograms picking up and being positive as we're coming up to these levels is also very bullish. So we're getting conflicting signals on different time frames, which isn't unusual. And when we go to the 1 year view, we're still seeing positive on the MACD indicator. When we go out to the 1 year view, so that we're looking at the daily, this is also looking strong and positive all the way along here. It doesn't look like it's giving us that same divergence that we could see in the 1 hour, which may mean that the point of the nose is running out of steam, but overall the whole market has still got some power behind it. Now, if we go out to the 1 year view and look at the RSI, this is something that I want to observe longer term, because this long-term uptrend in the RSI is something that we should be seeing when we're looking at super long term. This, I expect, is going to be going up for quite a while, a year to 18 months, that the RSI will continue on this uptrend. And then through that period, we should see it coming back, and then hitting some of these extremes and staying up at the top like this. If we are in that kind of parabolic uptrend again, this is how the RSI will behave in the long term. So we're still matching in for going up, except at the very point of the triangle, when we get into the 1 hour bar, it does look like this point is running out of steam a little bit. And I'm still holding to believing that. Now, this is all relative to a trading plan though. If we go out to the 3-month view, and I'm going to use the on balance volume chart, 3-month view, zoom it back, we're looking for a 1, 2, 3 bottom formation. So here's a number 1 point, here's a number 2 point, here's a number 3 point. And we identified those all the way along through these videos. And then when the exponential moving average crosses over, that's a confirmation of our buy signal out of this bottom formation. After that, we don't have an exit signal until that 12-hour exponential moving average crosses back over again. So there's no exit signal in sight for this trading plan. The best we do is put your stop loss here and wait for it. There are a couple different exit strategies. We could use this one on using the 12-hour bars, or we could zoom into the 4-hour bars and start watching for our exit signals here. And even here, we don't have the exponential moving average crossover, which would be our final get out if we were using this plan. We don't have a break of uptrend lines to say that we should be getting out. And so even though it's making a top formation here, for my own trading plan, this doesn't give me any exit signals yet. And so I want to leave it so that my at least the 4-hour exponential moving averages must cross over before I do my full exit, though I may take a little bit of my profit off a top like this. My full exit doesn't happen until this crossover, because I don't want to be taken out by spikes of prices like we see here. I want to be far enough back that my exponential moving averages can hold me in through these kind of panic spikes or bot driven spikes or social media news spikes or whatever comes up. I want to have the capacity, the elasticity in my trading to weather this kind of thing. Now, if we zoom right into this top and we get into this, it is shaping up to be a top formation. And should it start to break down below this, it would start giving me sell signals. And I don't go jumping in selling with the whole thing right off the bat. Just like building a bottom formation trade, I build a top formation trade in stages. So as it's starting to collapse below these levels, I'd put on a bit of my stage. Should it prove me correct, I keep that trade. If it comes back and retests these levels, as we've seen it do so many times, this is another chance to consider adding on or starting a trade. And then I would be watching all of these different levels on the way down, either the break of the level or the retest of the level. Those are different places to sell. And I was just looking at another chart. That's for the next video. We'll talk about that. In order to know what Bitcoin is going to do next, up or down, I also want to take a longer term perspective and pay attention to the support and resistance from the past now. Just basic technical analysis that it's going to take some time for the prices to break through this powerful support and resistance level that we've seen set up here. So watching for those things, seeing that top formation, knowing that there's more volume coming in, that it could pull back, but we are definitely in a bull run for Bitcoin. Let's take a look at the Bitcoin dominance chart, because this is going to tell us what's going to happen relative to altcoins. And we can see Bitcoin is in an uptrend since the beginning of April, the Bitcoin dominance, and a mini uptrend just in the last little while. So if I zoom into the last 5 days and we're looking at that parallel channel within a parallel channel, now what I'm watching for is confirmation of the top formation that we're seeing in Bitcoin, that Bitcoin would be topping out and pulling back, and the altcoins would take that opportunity, that reduced pressure, to pop back up. That should push our Bitcoin dominance down from here. If that top formation is breaking and it is a valid sell signal, this should confirm it. And then we're looking at the altcoin market cap overall, which is up since December, but down since the beginning of April, and now coming to an important decision point. Are we going to be breaking lower and the alts just lose ground, or are we going to be going higher here as Bitcoin dominance suffers and altcoins start to take some space? The next thing I want to finish up with here is our bull market watch. Yesterday we did this and it got to be even more bearish, where the number of sell signals, the number of failed markets increased, and the number of buy markets decreased in this last little while here. So the bearishness is increasing according to the measurements on Poloniex. And finally, the bearishness is increasing on our measure on Binance as well, where from May 2nd to May 5th, we had 20 new markets go to fail territory. That is new lows that they haven't seen since like last September and December. They're really failing to new lows. We had a whole bunch of the markets that were passing. They were staying above those 1, 2, 3 bottoms. They shifted down to near fails, and a bunch of those warnings shifted down to fails. So that is an increase in the bearishness as well. We're not seeing a turnaround in the altcoins, not yet. And it may be another couple weeks before they can give us a bottom formation that is tradable there. So if you like this show and you think that's interesting, I love it. Hit the thumbs up button. This is mostly for my research so that I can come back. So you're learning more about my own trading system. And if you find that approach interesting, head to the link down in the description below to digitalcurrencytraders.com. you can save 80% on my 100-page book that I've been writing for the past 4 years. And it talks about, it's a tutorial version of how I earned and traded my way from zero to over $500,000 from beginning of 2015 until the beginning of 2018. And of course, everything's come back since that time. We also have a new cryptos alerts signals package that you can check it out. Try it for $1 for 7 days. And if you're just beginning out in cryptocurrency trading, be sure to get the free chapter from my book so that you know the core principles of what I'm doing. If you're interested in these live streams, you can click on links on the homepage here, where you can go to our cryptocurrency bull market watch stream, or find back issues, or find this 24 hours of Bitcoin stream right here. Thanks for watching. I appreciate your audience, and I hope this helps with all of your Bitcoin trading. That's it for today. We will talk to you tomorrow.